Good evening. Welcome. If you can hear me, can somebody give me a thumbs up or acknowledge it in the chat box? Oh, I got a thumbs up from Ariana. Thank you. Ariana, did I say it right? Well, it's 7 o'clock. We're supposed to start at 7. I like to be punctual. Actually, I'm told statistically we'll have quite a few people joining us over the next 30 or 40 seconds and 3 or 4 minutes. So uh, without getting into any real content, I'll talk about what we're going to try to cover tonight. Mistakes you do not want to make in real estate, how to shop for a house, how to get ready, what your options are when you're shopping. We're going to talk about mortgages. We're going to cover first-time home buyer programs, and we're going to give you some ideas of where you can get some more information. As I stall a moment or two here, if you could in the chat box tell me where you're reaching out from, it'd be great. Florida, Tampa, Orlando, DeBerry, Orlando. Thank you. Be blessed. How cold is it out there now? Temperature's just dropping. Thank you, Nova. Well, some of the content that I'm offering tonight is for first-time home buyers, and some of it is going to be for sellers, and some of it is going to be actually for those who don't want to make a 46 Grace. It's 46 where Grace is. Uh, I'll try not to look at the chat box so that I can give you the content that I hope to be able to provide you. But we're going to start off with the mistakes that you can make in real estate. And these are not all of them. These are just what we're going to cover tonight. Um, but before we go, if you are a first time home buyer, it's a pattern to be stressed and concerned and uncertain and anxious. And when this slide was made, I thought about it and I thought, you know what? This is ridiculous. Every single real estate transaction is stressful. Nobody wants to make a mistake. Every transaction has risk. Am I doing the right thing? What do I do? I've never done it before. And what I'm hoping I can do is to convey to you that your best bet is to be able to attract and bring on a trusted advisor that's going to help you make these decisions because it's a bunch of forks in the road and you don't want to go into a real estate transaction without having a trusted advocate on your side. So, what my agenda tonight is to cover education, to identify the process, to really reinforce to you to use the experience of others to achieve your goals, to give you direction. And we're going to start off by just some observations I've made. I've watched a bunch of these home buyer webinars, and I found there's a propensity to get very technical, to baffle the audience with details that are just not necessary or even appropriate to a group setting. I think it comes from the idea that if it's all detailed and complicated, you'll throw in the towel and say, can you do this for me? So, what would I like you to do? I'd like you to relax. Don't take any notes. I'll send you a copy of this session. The next time you watch it, if you find value, you can go ahead and take notes then. Right now, what we're doing is education. Uh, from the Wizard of Oz, they look behind the curtain. Well, we're going to go behind the curtain, and I'm going to try to give you some inside information so that you can glean some value from this experience. I'm Randal Jenkins. I'm a mortgage loan officer. I've got 25 years in real estate. I run an investment company. Prior to this, I spent 18 years in the financial services industry as a stockbroker. And what I've found is that you're not doing real estate today. You're getting ready to do real estate. It's preparation. And I'm going to go through a number of examples on what you can do to get yourself prepared so that when you do real estate, you'll be much more prepared. So I get a lot of calls from people who are shopping, and I tell them you can find a house and then go see if you can pay for it, or you can find the money and then go shopping. And by the end of the seminar or webinar, hopefully you're going to know why you should find the money first and then go shopping. If you use Chat GPT and ask for the steps to home ownership, it doesn't say come to this class. I stuck that in there, but it says get a pre-approval, go shopping, move into your dream house. And that's so simplistic. It's almost, it's not funny, but it is funny. It's way too simplistic. But anyway, a lot of you came onto this webinar because you were looking for how not to make mistakes. And I could probably name a lot of mistakes. I'm going to cover 6 or 7 of them right now, and then we'll move on to how to buy a house. Ignoring home buyer incentive programs. There's a lot of grant money. There's second mortgage money that you may or may not have to pay off. There's down payment assistance. And they're not the easiest thing in the world to get. And you're 90 days away from buying a house if you have to go through the down payment or buyer grant program. What you're going to find is that some of these programs don't have funding. They run out of money. So you'll go to a class, you'll get a certificate for down payment assistance, and they don't have any money, but you have to wait until the down payment assistance money is there. But there are some grants out there that you can get right away if you qualify. Along with our education here, we're going to talk about mortgages, a lot about mortgages. The primary mortgages are conventional, FHA, USDA, and VA. And you don't need to know this. What's going to happen is you're going to make an application for a mortgage, and it's going to spit out some solutions. And likely 70% of the people out there are going to end up with an FHA mortgage. And you're going to find me talking a lot about FHA mortgages. But for right now, we're talking about down payment assistance, and a big mistake is not investigating that. FHA stands for Federal Housing Administration, and these loans are for first-time home buyers that may not have a lot of money down. And I'm going to show you some tricks how to possibly even get a no money down FHA mortgage. The benefit of FHA loans generally, and we're in a specific time right now with these hurricanes that allow us to get some zero down FHA mortgages, but I'm going to talk about generally here. Regular FHA mortgages are 3.5% down with a 580 credit score. And it's your best bet if you are a first-time home buyer. You're likely going to go with an FHA mortgage. But right now, we're in a lot of the counties are in a presidential designated disaster zone. And that means that this 403H loan is available. It's a no money down FHA mortgage. You're still going to have closing fees that you may be able to get to the seller to pay for. And you're going to need your inspection fees. And I'm going to spend a little bit of time on this later in the presentation. But for right now, we're going to run through these slides first. Conventional loan is if you have more money down. It's not. Conventional loan is basically everything that's not a government loan. When you're looking to purchase a home, you can use your 401k, you can use your gift money, you can use stocks and bonds and cash, but you cannot use a credit card or a personal loan or undocumented cash. Eligibility. Hey, if you have any questions about these, just go ahead and sign up for a free one-on-one session with me. In the link, I just put a link in there if you want to sign up for me to get in there and look at your personal situation and see if, you know, the solution for your home ownership dreams are apparent, or whether it's going to be a challenge and we have to jump through the hoops to get you the money, because ultimately it's all about getting the money. All right, that dovetails nicely into getting a pre-approval. I'm going to spend a lot of time talking about pre-approvals because a lot of realtors will not show you a house without a pre-approval. For me, it's not about the pre-approval, but it's really about knowing if you're FHA. The FHA buyer challenge is not well discussed, in my opinion. And I'm going to spend quite a bit of time talking about FHA mortgages and the challenges that FHA buyers, which are generally first-time home buyers, face when they're looking to buy a home using an FHA mortgage. But any mortgage approval is going to be based on credit and income and your down payment. And I can virtually ask most people, hey, do you think you're qualified to get a mortgage? And they know they're not. But a lot of times, the people that are qualified, they'll say, I don't know. And they are qualified. Anyway, the loan pre-qualification steps, credit, income, assets, determining how much house you can buy, determining what kind of bargaining power you're going to have with a seller. And I'll go into some of that regarding FHA right now, because FHA for sellers is the least attractive mortgage for sellers. Sellers are weird, and I'm going to talk about sellers. But right now, we're going to go through some of the tips for a loan approval. Don't make any large purchases. Don't change banks. Don't do any balance transfers. Don't close any credit card accounts. Don't consolidate your debt. Don't apply for new credit. Don't max out or overcharge your credit card accounts. And all the do's I'm going to skip, because we're not in how you get a mortgage. We're in mistakes right now. We don't want to make mistakes in your home buying efforts. One of the things that people don't realize is using your own banks. Banks are expensive. Large banks consider you just a number. They have stricter guidelines that might not cater to your specific needs. And large banks a lot of times have large prepayment penalties. Going to the bank is kind of like, oh my goodness, my internet connection is unstable. All right, going to the bank is like going to Walmart. There's no negotiation. You want to buy something, this is the price. You can't afford it, you don't get it. And that's why shopping for a mortgage is so important. Now, a mortgage loan officer that works at a mortgage broker will have access to dozens or hundreds of lenders that can shop your particular situation. And it's amazing the difference between a mortgage loan officer at a bank versus one at a mortgage brokerage that has a lot of different options they can offer you. All right, mistake number 4 is builders. Builders are unique. They have their own agenda. They will tell you, oh, I'm going to give you closing cost assistance, but that might just be in return for a higher rate. The sales agent that works at the model works for the builder. They're experts at getting buyers to effectively jump in front of a bus and get not the great deal that they could have gotten if they had their own advocate. The sales agent at the builder will be, oh, I'm your buddy, but they're not your buddy. They work for the other side. They work for the builder. And if you are looking at buying new construction, it's in your best interest to bring a realtor with you to represent you. Skipping a home inspection. In Florida, you're required to have a 4-point inspection to get insurance. So at the very minimum, you're going to get a 4-point inspection, but a total home inspection is really important. If you never bought a home, and even when you do a home inspection, you're going to see there's tremendous examples of people who had a home inspection and they didn't find something and it came back to haunt them. For me, the negotiation doesn't start until the home inspection ends. And I'm told that I should tell stories in this So let me tell you about a deal I did 2 or 3 weeks ago. We did a camera inspection of the sewage line. Sewage line inspections are $400, $500, $600, and sewage lines are made out of cast iron, and cast iron lasts 40 or 50 years. So if you're looking at a 1970s or 1980s home, it is very likely that it's going to have a sewage line challenge. And a sewage line is 10, 15 grand to inspect, I mean, to repair. In this particular situation, the buyer was putting $80,000 down. And he said, look, if the sewage line goes bad, I cannot afford to fix it. So we came up with the idea of, instead of putting 80 grand down, he put 70 grand down and held back $10,000 in case he has to change his sewage line. And I'm not going to even go into the challenge. If you don't get the home inspection, you must get a home inspection or you're making a huge mistake. Homeowner association document review seems kind of apparent and obvious, but the reality is this used to actually say condo association, and you can't buy a condo in Florida right now. If you're looking at condos and you're thinking of getting a low maintenance kind of property, you want to look at townhouses and you want to look at villas. All right, so we talked about not ignoring home buyer incentive programs. We talked about getting a pre-approval. We talked about the bank versus using a mortgage company, looking at multiple lenders so that you'll have better options. We talked about not skipping a home inspection, and we talked about the danger of buying from a builder. So moving on, you don't know what you don't know, and you don't want to get your education from bad experiences. You want to get your education. You need an advocate that knows what they're doing, that's going to stand by you during the transaction and help you not make the mistakes that are so easily made. So we're going to move into another presentation that doesn't have pretty slides, but it's an illustration of the process. Before we do, though, I want to go over mortgages. Now, don't take any notes, okay? There's not going to be a test. If you do want to have a test, then the test should be me and you on a one-on-one. I'm going to put the Zoom link up here again. When we get together, if you are open to it, we'll discuss these players. But I do want to run through them because I'm going to refer to them and I need you to have some exposure to them. Okay, so the mortgage loan officer can be at a bank, or it can be at a mortgage broker, it can be at any kind of lender. That'll be the person that you do your one-on-one with. It's going to help you get through the process. A mortgage broker is a lender that has a lot of options, dozens or hundreds of different lenders that have the opportunity to help you get your financing. Wholesale lenders, this is the most interesting thing. Nobody in the real world knows about wholesale lenders, but wholesale lenders do not do business with the public. Every day, they're out there calling retail mortgage brokers. Hey, we got a special. Hey, we're taking a lower credit score this week. Hey, we're giving back 1/8 of a point. Hey, we're giving a buy down. Hey, we'll pressure wash your driveway if you give us a loan. That was humor, but anyway, wholesale lenders, and I'm going to show you some behind the scene look at what it looks like where wholesale lenders are trying to induce retail mortgage brokers to lend their money. Retail lenders, credit unions, banks, basically lending their own money. They have a model. If you fit the model, you get a loan. If you have a more challenging situation or you need help, it's just like going to Walmart. If you're short, they're not going to help you make that purchase. Correspondent lenders, you don't need to know about. Direct lenders, if you're not borrowing a huge amount of money, you'll never interact with them. Same thing with portfolio lenders. Servicing companies, you say, I borrowed the money from Bank of America, but now this other entity is servicing my loan. This is normal. Mortgage servicers are frequently different from those you borrow the money for them, and it doesn't matter. But when it comes up, you're going to say, oh, yeah, that Randy guy told me about this. Okay, Fannie Mae, Freddie Mac, and Ginnie Mae are government entities. When you do a mortgage, it's if it's a qualified mortgage, then it's likely it's going to be sold back to one of these government agencies. And even though the servicer will be in there, you're never really going to know that Fannie Mae or Ginnie Mae or Freddie Mac bought the loan. You don't need to know any of this, but for the sake of education, I want you to get exposed to the fact that this is what happens in the mortgage world. Private investors and hedge funds, underwriter. Okay, this is really interesting or important. The mortgage loan officer, the mortgage broker that works for you, that's your buddy. That man or woman is going to be on your side, and they're going to do everything in their power to get you qualified to get this money so you can buy a home. The underwriter is the one, I don't want to say the bad guy or bad girl, but they're the one who is representing the lender and saying, oh, they had a late payment on a credit card, or oh, there was something in their credit history. Oh, we're not going to be able to do this. The underwriter is the reason you get rejected. And you'll find your mortgage lender is going to be saying, oh, the underwriter, we need to find it. We need a piece of paper. We need some documentation. We're, you, I am a mortgage loan officer, but you and I, if you're my customer, you're my client, we're going to be the ones who are going to go and button heads with the underwriter to try to get your file approved. The appraiser, you probably already know, is the one who's going to determine the valuation. The title company is where we're going to handle the closing. The closing agent or the escrow agent is just like a title company. We use title companies in Florida, but some of the out-of-state people may not realize that we use title companies in Florida. Up north, they do it differently. All right, so you're shopping for a mortgage. What does it look like? You're going to see advertisements, you're going to go online, and you're going to see what I call the teaser rate. The teaser rate is how they get you to respond to their marketing. The teaser rate is something you may not get. You likely won't get the teaser rate. Hey, you may get the teaser rate, but the teaser rate is designed to get you in the door. And then they pull your credit. They find out all the reasons why you don't get the teaser rate. Oh, it's a condominium. That's a 0.5% more. Oh, you've only been on your job for 2 years. Oh, you're self-employed. They're going to find every reason to charge you more than the teaser rate. All right, there's two kinds of applicants. There's the highly qualified and there's everybody else. The question we're going to ask, or you're going to ask yourself, are you willing to do whatever it takes to get a house? Or are you wanting the best deal at the best rate with the least amount of closing fees because you know you have the credit and income and you're looking to get the best deal? Well, the fact is, if you are a highly qualified applicant, you are going to get the best deal, and everyone else is going to pay more. So let's look behind the curtain. I told you every day wholesale mortgage brokers are out there trying to get retail mortgage brokers to place their money. And every day we see wholesale mortgage brokers trying to induce us retail, because wholesale mortgage brokers don't do business with the public. And this is what it looks like, and nobody sees this. Every day, mortgage brokers get what's called an opportunity to look at I call it the inside sheet. I was a stockbroker. That's a term from there. But the reality is that in this example, there's 651 qualified mortgage opportunities being offered. There's 51 non-qualified mortgages being offered. The way that you read this, if you want this is 6.625%. This is 6 5/8%. To get this rate, you actually have to pay $1,247 per thousand to get that rate. To get 6 3/4, you have to pay $707. But at 6 7/8, they'll actually give you a credit, towards your closing fees of $93. If you jump up here to 7.375%, well, that's not a good one. Here, 7.25 on this particular, you can't see it, but there's other columns and it has the names of these companies that are offering this. And I'm not going to go there because I might not should be even showing you this, but I'm showing this to you. This is a behind the scenes look of how mortgage brokers, how pricing occurs and how it works out that you are offered these various rates depending on your credit. All right, so enough of that. Let's talk about shopping for a house. Let me take a breath here, drink a little bit of water. Is anyone still here? It's funny, I can't see the chat box, doesn't seem to be updating. So if I lost you, I'm recording this. So oh, is that yeah, okay, thank you for those of you who are responding. I'm recording this, so I'm going to use this to market my services and myself. And so I'd love for all of you to come call me, set up a a meeting with me. But if you don't, this is actually my very first webinar. And I'm going to teach you. I spent a lot of years in real estate. I own a real estate investment company. We buy and sell houses. I bought a lot of houses and I've sold a lot of houses. And what I've found is that people behave poorly when they're doing the biggest transaction of their lives. Sellers get really emotional. They think that my house is great. Oh, you want my house? You're going to have to jump through hoops. And thank you, Alex. So I've seen a lot of bad behavior in real estate, and sellers are notoriously, they're all stressed out. They want a buyer. They can't get a buyer. They need to move. They don't know what they're doing. They're all stressed out. They make unreasonable requests. They have temper tantrums. If you make an offer, it means you want what they have, and then they want to play hardball. And I've seen a lot of situations where you just want to walk away. I don't want to do this, but my buyer likes the house. You want to try to get them a deal, but you can't because the seller's behaving terribly. And by the way, buyers get emotional too. It's the biggest transaction of your life, and it's likely that you're going to be emotional about it. And I train a lot of new realtors, and I'll get phone calls and they'll say, "Oh my God, you won't believe it." And I'll hear these stories and I just tell them, look, this is normal to get upset and get emotional. And I'm going to talk about sellers some more because if you're going FHA, you have a real challenge and I want you to be prepared for it. And generally speaking, I don't see FHA buyers getting appropriately trained to be an FHA buyer. So let's move through this. Just a forewarning, there was a realtor lawsuit. The Department of Justice and the National Association of Realtors changed the way that realtors work. And it's thrown a big, just as an aside, you don't see a lot of travel agents anymore. The internet got rid of travel agencies. You can go on Orbitz, you can go on Travelocity, you can go on to all these websites. You don't need a travel agent. They're gone. The same thing happened to commissioned salespeople. I mean, commissioned stockbrokers, and I was a stockbroker. And you can go online and do online trading for free. So that model changed. And I got to tell you, the realtor model is changing. It may very well come a day where there is no realtors. They're just a Zillow and an Open Door and all these BlackRock. And anyway, for now, if you want to hire a realtor, you have to sign a buyer's broker agreement. It spells out the commission. And then your buyer's agent that you hire is going to attempt to get the seller to pay the commission. And it's happening. I've got 22 listings right now, and I get calls all day long. Is your seller paying a commission? And the answer is hell yes. Of course, because no one's going to sell this house if they're not making a commission. The lawsuit basically proved that if you put a big fat commission on a house, realtors will show it. Realtors will bring buyers. And if you're on this webinar with the idea of talking to me about listing your house, let me just assure you, paying a buyer's agent a commission is going to get your house sold. And that's what the lawsuit was about. It was determined that if you put a big commission on a house, realtors will show the house. And it makes sense. But anyway, the rules changed, and now you can't make an offer or you can't show a house to a buyer unless you have a buyer's agreement with them. And just Google realtor lawsuit, and it's a whole new world. All right, so let's talk about you going out and buying a house. Let's break it down. You're either going to pay cash, you're going to be an FHA buyer, you're going to have a VA loan or a USDA loan. VA is military and USDA has to do with location. If it's in a rural area, you can go on the USDA map and see if a property is a USDA property. And when you hire a mortgage broker, they're going to look it up and see if you can get a USDA loan. The USDA and the VA loans are great because they can be no money down. And no money down does not mean no money. It just means that the down payment could be as low as zero. As I mentioned before, conventional is everything else. A PMI is private mortgage insurance, and you don't want it, but you may not have a choice. And if you're going FHA, it's very likely you will be paying PMI. It's going to add 100, 150, 200, depending on the amount of the borrowing amount, you'll pay private mortgage insurance. And it's not great to have, but if you need to buy a house, then you are going to have to get the money one way or the other. And the way that a lot of borrowers are able to get mortgage money is by going through a lender that's going to charge you private mortgage insurance. And that's how they induce lenders to lend money to someone who may not be the perfect borrower. And if you want to know more about that, book half an hour of my time and your time. I put up the link again to remind you that let's see what we can do to get you a house. All right, so you're going shopping. This is the timeline. Let's assume you found a house. You're going to do a contract. 3 days later, your earnest money deposit is due. Generally, the buyer wants to put down as little as possible, and the seller wants as much as possible. Generally, 1% is safe-ish. So if you're buying a $300,000 house, figure 300 grand. I mean, assume $3,000 in earnest money. 15 days after the contract date, your inspection period ends. This is so important because if you fail to meet that inspection period, you effectively become a cash buyer, which means that you could lose your deposit and the seller could sue you. Generally speaking, sellers threaten and they get all mad and then they take your deposit and they likely go away. But in theory, if you sign a contract, you are obligated to fulfill that contract. And if you don't, there are ramifications. 30 days after the contract date is the financing contingency notice. You must give notice to the seller of your status at 30 days. If you do not give them this notice, you can lose your deposit or you become effectively a cash buyer and you no longer have a financing contingency. The appraisal is part of the contract. If you're getting financing, you'll have an appraisal contingency. It's very important that if you don't meet the appraisal, that you either work out a new deal with the seller or you walk away and get your deposit back. The day before closing or the day of closing, you do your walkthrough and then you have your closing, then you move in and then you find out all the things about that house that you didn't know that you might have wished you'd known before you closed. I have a lot of content on YouTube And one of the things that I recommend, the 7 things you must do if you're buying a house. And one of them is in that 2 week inspection period, if you knock on the neighbor's door, hey, I'm buying the house next door. I'm so excited. I just wanted to say, hey, is there any dark secrets about that house? Is there anything that you're going to tell me after I move in that I wish I had known before I moved in? And there may be a deal breaker in there. It hasn't happened often, but I certainly gotten phone calls from people who bought homes and say, did you know that somebody was this and they had an event and it was this, it was a drug house? I mean, who knows? The neighbors know. All right, so what's it going to cost? Even if you have a no money down deal, you're going to spend $600 to $1,300 in inspections. You're going to spend money on a credit report, and you still might not get the house. There's deal breakers that come into it, and you don't get a refund on the money that you spend when you're investigating the house. But spending $600 or $1,300 is a whole lot cheaper than buying a house that you wish to God you didn't buy. Back in the day, around 2013 and 14, after the Gulf oil spill, prices started rising. And buyers were in a weird situation where houses were selling for more than the appraised amount. And we had a lot of stories about people who had done the inspection, they had paid for the appraisal. Oh, the appraisal's not on this, by the way. And then it did not appraise. And then the sellers refused to lower the price. And I didn't find a house for a particular buyer, but I was talking to him and he had done 3 times. He had done a home inspection, he had done an appraisal, and he didn't get the house. It's a terrible story, but this is how you learn. These stories are really frightening when they don't work out. All right, if you're a cash buyer, your closing fees are going to be around $500. And if you're in financing, then your closing fees are going to be around 6% of the purchase price. And that'll be the loan fees, the appraisal fees, the title fees, the prepaids, the insurance, the taxes. And you're only going to pay these if you buy. Actually, that's not true because the appraisal you're going to pay for even if you don't buy. What's going to happen is you're going to reach a point in that timeline where they're going to order the appraisal. They're going to wait to the last, not the last minute, but about 2 weeks before closing. And if everything looks good, that you're a good applicant and you're likely to get this home, they're going to have to order that appraisal because the underwriter is not going to lend you the money until that appraisal comes in. And that appraisal could be a real problem. But the 6% that you're going to need for your transaction, if you're using financing, can be paid for by the seller. There's a real challenge to this because these sellers don't want to pay it. They don't want to pay your commission. They don't want to pay the closing fees. So your negotiating ability will be way stronger if you've got your down payment and the closing fees. I can assure you, I will get you a better deal in the marketplace if you have your closing fees. If you don't have your closing fees, then you are going to have a challenging endeavor. And people get houses every day who don't have closing fees, but they don't get the house they want necessarily. They don't get the good looking houses that go under contract in the first 2 weeks. The desirable good deals don't go FHA, or at least they might go FHA, but they don't go FHA, and you get the 6% closing fees from the seller. So what's your situation? Everybody's in the same deal. Either you're a cash buyer, you have little or no money, or you have 5 or 10% down, or you have 20% down or more. Now, we're assuming if you're financing that you have good enough credit to buy a home and you have 2 years of tax returns. If you don't, you're not getting a house. And you're going to see my next slide is going to say, you're not getting a house. But, this is not designed for everybody. This is education. There's no promises that we can get this thing done. Your situation is going to require it's a puzzle. Real estate's a puzzle. And we're going to figure out where you are in the puzzle. And we're going to say, go do this, go fix that, go pay this down, go get 2 years of good payment history. We're going to counsel you on what you need to do to get a house. And, I've been doing real estate for 25 years, and I've had people who came to me and then they went away, they did what they had to do, and then they came back and then they got a house. All right, so let's say you have no money. You're not getting a house, at least not right now. But if you have no money, you're going to be in the find the money business. The find the money business is going to find down payment assistance. It's going to get grants. It's going to the classes. It's going to use gift money. If you're an American Indian, they have a tremendous program. If you're a veteran, if you're buying in a rural area, if you're qualified for down payment assistance by your job, by your residence, etc. If you have no money and you want to buy a house and you're paying $2,000 a month for a rent and you wonder why you can't get a house, it's because you can't get qualified, because you don't have the down payment. Now, right now, we're in a really unique situation, and I'm going to cover it. Let me see if I can jump to it. No, I can't jump to it. I'm going to go ahead and just keep going slide by slide so I don't get myself confused. So if you're in the first category with little or no money down, you can still make an appointment to meet with me. Okay. I will still gladly counsel you on what you should be doing. Frankly, you should spend the $100. Actually, you know what? I have a way to get around the credit report on the initial side of it, but you're going to have to get a credit report, either one of the free credit reports, or you can get the tri-merge from me. But either way, your credit report is key to your qualifying for a mortgage. All right, let's say you get the down payment money. Let's talk about down payment assistance. SHIP, S-H-I-P, is a first-time home buyers program where they lend you the money and it can be forgiven. You go to a class, you get a certificate, and then you find out they don't have any of the down payment assistance money available. But when you have that certificate, when they do get new funding, you're going to be waiting. Oh, they're getting funding in 6 weeks. Oh, in 5 weeks. Oh, in 4 weeks. When that money is funded, all the people that took the class last time that didn't get the funding, they all jump in and get the money, and then it's gone. Right now, Hometown Heroes is a program that's actually, you might have heard of it. Hometown Heroes was for firemen and first responders and teachers, but now it's available for everyone. So let's say you have some money down. 3.5% is the magic number for FHA. So if you're talking about $200,000 house, which there aren't a lot of $200,000 houses that'll go FHA, you're talking $7,000. $300,000 house, you're talking about $10,500. Then you need to have your prepaids, your 6% in closing fees. Okay, prepaids that we didn't talk about, but the lender is going to require you to prepay insurance and taxes. So your 6% in fees and your prepaids. If you want to buy a house today and you have 3.5% down and you're 6%, we can go shopping right now. If you don't have it, you need to be working on down payment assistance. Or I got a program we might can do. If you've got good enough credit to buy a house and you've got 2 years of tax returns, it's possible that we can get you a house for no money down. And when I say no money down, I mean no money down in the transaction. You're still going to have your inspection money. You still may be required to put out that money for the appraisal up front. But I'm going to cover it, I think, in the next slide. And here it is. There are a lot of counties. These counties right now are designated as presidential designated disaster zones because of what happened in Hurricane Helene and Hurricane Milton. If you have a driver's license that's in these counties, you can qualify for a 203H, no money down FHA loan. And if you can get the seller to pay the 6% in closing fees and get them to pay the realtor commission, You can get a house for no money down. I can run back up to that slide and show you, you still have to pay for your inspections. But this is a pretty unbelievable opportunity. It's only going to last until I think September 26th or the 25th. It's a 1-year program for people in a designated disaster zone. But here's the cool thing. Let's say you don't want to live in Florida anymore. You can take that 203H money and you can go to Idaho or Iowa or Ohio or anywhere in the country, go to Hawaii and use this 203H money. Now, the downside of it is that if you don't put any money down, your unpaid principal balance, I didn't give a definition for unpaid principal balance, but unpaid principal balance is what you owe. And if you put 20% down, not only you're going to get a better rate and no private mortgage insurance, you're going to owe a lot less on the house. Your payment's going to be lower. So the more you borrow, the greater your payment's going to be. And ultimately, there are people out there right now that are paying huge amounts in rents. And if you're paying $2,000 or $3,000 a month in rent, you can certainly afford to buy a house. The problem is you may not have the down payment and you may not have the inspection money. You may be well qualified. So that means you've got to be in the find the money mode of down payment assistance or grants, and then working to get the seller to pay the closing fees. All right, let's go through this last bit. If you have 20% down and your closing fees, and you want the best rate with the best terms and the best price, and you've got great credit, you are going to get a great deal. And when you are making offers on a home, cash buyers are king. Cash buyers are going to get the best deals. But the next best buyer is one who's going conventional, who's got 20% plus down and has their own money for closing fees. When we're negotiating for a home and we're losing all of our leverage, it shrinks. There's 4,000 homes in this county. Only 2,600 of them will take financing. 1,300 of them in a flood zone. You can't buy in a flood zone. 1,000 of them are priced higher than you want to spend. You'd have to have 3 bedrooms. So you're down to 20 or 30 houses. Is that all you can look at? And meanwhile, these buyers are out there on Zillow looking at these great deals and wondering why they don't get a house. All right, so sellers. I like to talk about sellers. And if you're buying a house, you need to understand that sellers are challenging. When a realtor decides to take on a listing, they interview the seller and they find out what kind of buyer they're willing to consider. The seller actually gets to put down, and this is the only reason you need a realtor right now, because you can go to Zillow and go shopping, but you won't have a helpful advocate trying to steer you away from making mistakes if you don't use a realtor. But it can be done. But the one button that is not on Zillow is the financing available. And I don't mean that they're giving you financing, but there's buttons on MLS that say cash, conventional, FHA, USDA, VA, special financing, and the seller gets to decide what kind of buyer they want. And a lot of sellers won't allow it to go FHA. I'm going to talk about inspections just for a moment here. The 4-point inspection I mentioned, you have to have for insurance. And the full inspection is what you have to have because you're smart and because you don't want to make a mistake. And FHA is going to send out somebody who's going to look at the house, and they're going to determine whether it's FHA financeable or not. And this is really, really key to understanding. Sellers will say, I'll offer it FHA, not realizing that that's almost like saying, I will make it pass inspection. I will agree that it must appraise. FHA sellers have to sign paperwork that stipulates that their responsibilities to the buyer. And a lot of these sellers, I see these houses where they've checked FHA, and I know they're not going to go FHA. They're just not. And then I see a lot of houses that will go FHA, but they haven't clicked the FHA button. And on my listings that have this no FHA checked, realtors are calling me, hey, can you think this can go FHA? I got a buyer. They need to go FHA and they want 6% in closing fees. And it's like, whoa, this seller will not be entertaining that buyer. Sellers want the most amount of money for their homes. In fact, is 100% of sellers want more than their home is worth. But FHA also has some really good things, and that is that the seller gets the full amount of the appraisal. FHA sellers get the most money. And if you think about it, cash buyers want a discount. Hey, I'm paying cash. I ought to get a deal. And they're right. FHA buyers are, I hate to say they're discriminated against because I'll probably get in trouble for saying that, but frankly speaking, FHA buyers are the least attractive buyers. FHA buyers, though, on their side, they're motivated. FHA buyers are actually the ones that are most likely to fall through after they've gone under contract. I talked about inspections. Inspections may reveal more repairs than the seller is willing to make. And sometimes it's 4 or 5 weeks into a transaction before a deal blows up because the applicant, because the buyer has a challenging credit situation. And sellers have had bad experiences doing FHA transactions, and some will refuse to work with FHA buyers. And in 25 years of doing real estate, I have never seen any FHA buyer get counseled to the realization that they have a really challenging endeavor. I've actually seen and heard of buyers who never got a house, and they didn't understand why. When there's a hot new house that comes out and this is the perfect house and it's great and look at the price, it's going to a cash buyer or a conventional buyer. FHA buyers are, it's a very challenging situation. All right, let's talk about you as a buyer. Buyers want a good deal. Everybody wants a good deal. The problem is that good deals are priced lower because they need work. The seller knows that this house needs a lot of work. I'm going to price it lower. And then all buyers want a good deal. So these poor FHA buyers, they're out there. Oh my gosh, look at this house. It's in my budget. It's got everything I need. The seller's not offering it FHA because if they were offering it FHA, they would charge more for the house. These houses that need a lot of work will not pass inspection. And realtors get a lot of inquiries from these buyers and these shoppers. These buyers don't realize that their financing is effectively going to preclude them from getting a good deal. They're looking at houses that are good deals that won't go FHA. I get an FHA buyer. I send them a list of houses that are only FHA approvable. And then they go on Zillow and they say, Randy doesn't send me any of the good deals. All I get are these high priced retail houses. I need a good deal. And then they go off into the wherever and they don't buy a house and they don't understand what happened to them. And they don't understand why I didn't send them any good deals. So I'm going to coach you that if you're an FHA buyer, jump on a Zoom call with me. If I had better skills in this webinar thing, I would get on MLS right now and I would show you how challenging it is to find an FHA house and what to look for. But I'm not going to do it on this call. If you want to, let me put this, I'm told I have to keep putting up this Zoom link for to book a call with me, because if new people join the call, they don't see what's up there. All right. Are you FHA? Lower your expectations. Isn't that terrible? Hot new listings, multiple offers. They don't go FHA. Homes that need work, don't go FHA. They won't pass inspection. The good deals, you know, are not FHA. All right, failed inspections. It's too much information. The current market. Okay, stay away from condominiums. The condo in Sunrise, that building collapsed a couple years ago. They rewrote the rules, the regulations. Condos are very, very questionable. Do not buy a condo. If you want a low maintenance property, look at villas and look at townhouses. The HOA fees are going up and up and up, and insurance is going up and up and up, and it's crushing the condo market. And if you own a condo and you want to sell it, it's a horrible time to own a condo. I live in a condo. My condo fee went from $350 to $815. Now I do live on the water and it's a spectacular view and it is what it is. And it's in a family trust and it was my mom's place and blah, blah, blah. All right. So avoid condos and avoid flood zones. Flood zones are going to require flood insurance. Flood insurance is going to run you $500, $700, $1,000 a month. And then it might get flooded and you do not want to be in a flood zone. And by the way, as far as new construction goes, they're building these neighborhoods, these new construction giant neighborhoods in areas where they have eliminated where the water can go if there's what happened during Milton, all that giant flooding that occurred. Some of that flooding went into non-flood zones. So you've got to be very careful about buying new construction. It's not on the slide, but if we get 15 inches of rain in 24 hours, this non-flood zone becomes a flood zone and you don't have flood insurance. I think the real estate term for that is Lordy, Lordy. All right. So for more information, to get a pre-approval, to go shopping, here's a bunch of my contact information. Here's my Facebook page, Florida Real Estate. No, that's not my Facebook page. I think it's on the next slide. Anyway, on my YouTube, at Randal Jenkins Realtor, I've got quite a bit of tips. I've got 103 real estate tips if you have an interest in doing more homework. If you come to me with a particular situation, I may very well refer you to one of my YouTube videos. I don't know where to go from here. Let's jump back into the last few slides here. Do you want to spend more time with me? What are your next steps? Book a call with me, get a pre-approval, go shopping. Any questions? For some reason, my chat box didn't show me any questions. So that's great. I didn't have to answer any questions, but anyway, I'm going to sign off here. Is anyone still there? Because the chat box isn't showing me anything. Can I get a bye-bye from anybody? Yes. Bye-bye. I'm here. Hey, thank you so much for showing up. I'm pretty excited about learning how to do these webinars. I feel like I have something that can be of value to you, and I'd love to share the opportunity with you if you have an interest. Have a great, great day and a great year, and bundle up, and thanks for coming. You know what they didn't do? They didn't tell me how to turn this thing off. I'm going to X out some of these buttons and maybe it'll all turn off. Hey, look at this. It's 7:58. I did it in 58 minutes. Hey, by the way, my phone number is easy to remember. It's 409 home in the area of 727. 409 home. I'm trying to type it in. 409 home. Did it work? Yeah, it did. So if you want to call me, I'm open to getting phone calls too. You need to do another Zoom. I am. I'm going to work on the content and see if I can go viral. I mean, how do you go viral? You have to like trip or something or do something stupid. I like to go viral by what is your YouTube link? Okay, cool. I can put that in there. Thank you. Okay. if you go to youtube.com/ at Randal Jenkins Realtor. Oh, I typed that in, but you can't see it till I hit send. Okay, there it is. If you Google me or not Google me, but if you go on YouTube and type in Randal Jenkins, I have two sites. One I'm wearing a suit and one I'm wearing a hat. I'm trying to get rid of the one with the hat. So go to the one with the suit. It has most of my best content. If you go to the one in the hat, you can see me surfing and having fun. All righty, V, thank you so much. It's 8 o'clock. Party's over. It's time to go have dinner. Thanks for coming, everybody. Have a great day. Bye now.